Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within company filings, and tonight we're diving into Immix Biopharma Inc., who apparently has been busy bringing new shares to the market, which always makes for an interesting read. Before we dive in, if you appreciate getting straight insights from corporate documents like this, make sure you are subscribed to the channel, and if you want to chat more about these filings, join our Discord community linked in the description below. This is a Form 8-Cake, a current report, and Immix Biopharma Inc. has filed it on the 7th of December 25 to report on some significant business events. So what is the big news here? On the 7th of December 2025, Immix Biopharma Inc., which we'll call the company, entered into an underwriting agreement, a deal with a group of underwriters represented by Morgan Stanley and Company LLC. Basically, they agreed to sell a bunch of their company stock to the public. These aren't just any shares, they are issuing over 19 million shares of their common stock. Now, this offering is happening at a price of $5.10 per share, but it gets a little more interesting. They are also offering what are called pre-funded warrants to purchase almost 500,000 shares. These pre-funded warrants are sold at $5.09 each. Now, why the slight difference in price? Well, these warrants essentially allow someone to buy stock later at a set price. The warrant price reflects that set price, which is 1 cent per share for these pre-funded warrants. So if you buy a warrant for $5.09 and then exercise it at 1 cent, you are effectively paying $5.10. Per share, just like everyone else who bought the stock directly, this kind of structure is often used to make an offering more attractive to certain investors, maybe for tax reasons or to allow them to buy in without immediately taking on the full share price. Now, these pre-funded warrants come with some specific rules. They have what is called an exercise price of just 1 cent per share. This price can adjust if the company does things like stock splits or gives out stock dividends. The warrants can be exercised anytime after they are issued until they are fully used. A holder can either pay cash for the shares or use a cashless exercise. This cashless option means they get shares based on a formula that calculates the value of the warrant against the stock price without them having to fork over more cash. This is common to prevent the holder from having to spend more money to get the shares they were already promised. Here is another interesting part about these warrants. There is a limit on how much stock a single investor can own through these warrants. They cannot have their total ownership, including shares and exercised warrants, go above 4.99% of the company's total outstanding shares. They can choose to increase this limit up to 19.99%, but they have to give the company at least 61 days notice. This is a way to prevent a single investor from gaining too much control of the company through these warrants, especially if they were to exercise them all at once. And if something big happens like a merger or acquisition, a holder of these warrants will get whatever they would have received had they exercised their warrants right before that big event, ignoring those ownership limits. This means their rights are protected even in major company structure changes. This whole offering is being done using a shelf registration statement that was filed back in January 2023 and was declared effective by the Securities and Exchange Commission. The SEC, they've also filed a prospectus supplement to go along with it on the 7th of December 2025. This just means they've already gotten approval to sell these shares over time and are now executing on that plan. So what does this all mean for Immix Biopharma? They are raising a significant amount of money here. The net proceeds after all fees and expenses are expected to be around $93.7 million. This is a substantial infusion of cash for a company. The offering is expected to wrap up on the 9th of December 2025. What is interesting is they note that the company may receive nominal proceeds, if any, from the exercise of the pre-funded warrants. This further emphasizes that the main goal of the warrants from the company's perspective is likely to facilitate the offering and bring in investors who might prefer that structure rather than immediate cash generation from warrant exercises. The underwriting agreement itself contains standard clauses like representations, warranties, and conditions for closing the deal. It is pretty typical boilerplate for this kind of transaction. The company is also agreeing to indemnify the underwriters, which is a standard practice in these deals, protecting the underwriters from certain potential liabilities. To back all this up, there is a legal opinion from the Loew law firm PC regarding the validity of the shares and warrants being offered. This is important as it provides assurance that everything is legally sound. Their consent is also included as an exhibit. Finally, we have the interactive data file for the cover page known as XBRL. This is machine-readable data that helps regulators and analysts process financial information more easily. Now let's break down the bigger picture. Immix Biopharma Inc. is essentially using this offering to raise a significant amount of capital. They are an emerging growth company, which means they are still relatively young and growing, and often operate with less regulatory oversight than established companies. Raising $93.7 million is a big deal for such a company. This money can be used for a variety of things like funding research and development, expanding operations, or paying off debts. However, It is important to look at the context. The fact that they are issuing so many shares and pre-funded warrants suggests they might need these funds to continue their operations or invest in future growth. The 4.99% ownership limit on the warrants is a common measure to prevent hostile takeovers or undue influence from early investors. The decision to issue pre-funded warrants at a price of just 1 cent per S-share exercise means the upfront price of $5.09 is the main consideration for those investors, and the company has already secured that money. Looking at the big picture, this move signifies a need for capital and a strategy to access it from public markets. While raising nearly $100 million is a positive step for growth, it also means more shares will be outstanding, which can dilute the value of existing shares if not managed carefully. The company's future success will depend heavily on how effectively they deploy this newly acquired capital. Are they investing in promising new drugs, expanding their market reach, or is this just to keep the lights on? Only time and future filings will tell. The fact that they have common stock listed on the Nasdaq, which is a major exchange, indicates they are aiming for a certain level of visibility and investor confidence. So to wrap things up, Immix Biopharma Inc. has successfully launched a substantial offering to raise capital. They are selling millions of shares and offering pre-funded warrants with some interesting ownership limitations. This shows a clear strategy to secure funding for their ongoing operations and future growth. The near $100 million injection is significant and will be key to their next steps. Alright, that is our breakdown of Immix Biopharma Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this capital raise will propel them forward or create long-term dilution issues? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord linked in the description for more discussions. Thanks for watching. See you next time.